G'day guys, welcome back to another Bitcoin video. Today we're going to be discussing the FOMC decision coming up in just 8 days and the fact that the market is expecting a 25 basis point hike at a 100% probability. We're going to be discussing the S&P 500 breaking out of a resistance level it has been fighting since January 2022. And finally, we're going to be discussing the short-term price action and of course, Bitcoin's descending wedge formation on a macro time frame that is currently breaking out of, and we will be seeing a confirmation of that breakout potentially by the end of the weekly candle. All right, guys, before we get into the video, check out the description, check out the pinned comment. We've got the VIP group down there. You can check out the results from that, and you can check out how to join it. We've got the Crypto Academy, and we've got the Bitget Exchange. And by the way, guys, I'm sorry for being a little bit flustered in this video. You might notice I'm a little bit slurry and just kind of off it a little bit. I'm feeling a little bit under the weather. Hopefully we'll be back to normal by tomorrow. But we've got some good content regardless to get into. So let's jump straight into it. So first and foremost, and just starting out here, we're going to talk about the daily chart because the daily chart is seeing yet another surge to the upside, which is quite surprising. But honestly, if we flip the chart over and we just invert it for a second, we can see that it's not actually that surprising. Look, here's the thing, right? Bitcoin has been on a steady downwards trend since November 2021. Of course, that's over a year ago. In fact, it's about 15 months ago and exceeding that point in just a couple of weeks as we enter February. So, you know, we've been in a downwards trend for a long period of time, and we're just kind of seeing the tip of the iceberg of that downwards trend coming to an end. And we can really see that reflected on the inverted chart here. When you see a chart go up this much, right, in this period of time, and you see it start to round out like it's been doing here since June, you're generally going to see it start to correct massively. And that remains true from this perspective here on the linear chart, the regular linear chart, right? We can expect Bitcoin to continue to be upside on a longer term basis. You know, the only thing we've really been contesting about that is whether it does it on a shorter term basis as well. I'm bullish on the market. I do think Bitcoin is macro bullish. Of course, I've been saying the bottom is in since 16K. I still stand by that. We've had this massive breakout. We had a breakout in the weekly chart RSI as well. Weekly chart RSI had a descending channel, descending resistance line stemming all the way back there from January 2021, and we finally broke that to the upside. It's led to massive upwards momentum, and now we need to discuss kind of this descending wedge formation. Before we get into that, we're going to quickly expand on what we're seeing here in the shorter term. So there's a very valid argument to be made here that Bitcoin is going to be seeing a correction soon. We've seen bearish divergence on the RSI. We've seen the Bollinger Bands be dramatically overextended and Bitcoin just honestly rallying over 50% without any sort of correction at all. There obviously is an argument to be made that correction could be coming soon, but you have to weigh that up against the macro, right? Yeah, it's like, yeah, well, we've moved up very, very strongly over the past month or so. But the point of the matter is this, you know, Bitcoin has seen this happen time and time again at the end of bear markets. Look at the 2018 move, right? We had long consolidation like we've been seeing right now in the past couple of months. And then we had dramatic moves to the upside with very, very little time for correction, you know, during 2019, bringing us all the way from 3K all the way up to, you know, 13K, which is more than a 4X with again, very little correction. In fact, the most thing we had in terms of correction was just sideways price movement for a couple of weeks in between, like in April here, 2019, and there in May 2019. So, you know, you could say we need a correction on Bitcoin, and the short-term charts definitely suggest that. But sometimes the macro just outweighs the short term, and I suppose that's what's happening right now. And as we see this descending wedge formation, you know, this pink one here, which is stemming all the way back from January 2021, start to break to the upside. You know, it's very important to note, we haven't seen a weekly candle close above it, okay? We've only seen a weekly candle open above it. So I wouldn't consider this a breakout yet. I think this could very easily be a fake out. And we've got 5 days remaining, and so there's plenty of time for it to be a fake out and plenty of time for the price to retrace back into that wedge formation. But it is worth noting that if we do see a breakout of this wedge formation, a normal measured move of this wedge, right, would actually bring us to a price point of around 55K on a measured move. Now, measured moves from long-term structures aren't particularly reliable because they take a very long time to play out. And by the time they start to play out, by the time they're halfway through playing out, you run into very important zones and people start to ignore the fact that we've seen a wedge breakout and start to react purely based on the new zones that you run into. You have to remember, guys, that the price moves up and down based on people buying and selling. So whatever's at the forefront of what people are looking at, that's what people are reacting to. If this wedge breaks to the upside, they're not going to be reacting to this wedge for more than a few weeks, right? It's going to go out of relevance within a few weeks for sure. But it is very important to see and very interesting to see Bitcoin break this wedge, especially considering at the same time Bitcoin is breaking this wedge, the S&P 500 is breaking a very similar downtrending line. Okay, this is a downtrending line on the S&P 500 stemming from January 2022. We've rejected from this line on 4 separate occasions, in fact 5 separate occasions, and right now we are seeing this line. I don't know what's going on here. Hold on one second. We've got the replay button on, that's right. We are seeing this line start to break to the upside. Just on yesterday's daily candle close, we breached that line. We've seen our first ever daily candle close above that line since, again, January 2022, and that is perhaps coincidentally lining up with Bitcoin breaking out of this wedge, or attempting to break out of this wedge. It does kind of beg the question, right? Will the S&P go down further? Because obviously when you break a major resistance line that's been going on for, close to, a year and a half, not really that close to a year and a half, but let's just say just over a year, I should say, you start to wonder, well, is the downtrend over? Has the S&P 500 bottomed? And we have discussed this in the past, and we've got in orange here, we've got interest rates, and in the white and in the pink, we've got when the S&P 500 bottoms. So this is the interest rates applied to the S&P chart. We can see that never historically since 1974 has the S&P 500 bottomed out while interest rates are rising, right? It's only ever bottomed out while interest rates are decreasing. So it begs the question, it's like, well, S&P 500 is breaking out now, interest rates are still rising. Are we breaking that trend, right? Will the S&P 500 bottom out before interest rates start to go down? Very important question. It's very impossible to answer as well. We can't answer it, right? And the reason we can't answer it is because the only way we could possibly answer that question is using historical data, and all of the historical data says otherwise. But it's certainly reassuring, right? It's certainly reassuring for the macro argument that the S&P is starting to break out here, and it will be very interesting to see how this works, and we'll be tracking the progress of the S&P, because obviously, the S&P going upwards is quite good for Bitcoin, of course, and that's because Bitcoin and the S&P are both connected to the macro and vaguely connected to each other as well. But, speaking of interest rates, we do have that interest rate decision in just over 8 days here, and we have a 100% probability, right? The market is expecting at a 100% probability that we see a 75 basis point hike. Now, that's very interesting, and the reason why it's interesting is because we saw a 50 basis point hike in the last hike, and in the hike before that, we saw a 75 basis point hike. So it's a very clear downwards trend in the rate of which the Federal Reserve is raising those rates, which is quite bullish for the markets, right? Because obviously interest rates aren't good for markets. And so the fact that they're slowing down the rate hikes is good, because it means that we're coming to a tipping point, right? We're coming to a point in which eventually, at some point in 2023, I think the market's expecting September at this point, we're going to see that quantitative easing start to happen again. We're going to see rates start to go down again, which is very good for the markets, of course. So we'll be keeping a close eye on that, because obviously in 8 days, when that decision happens, there'll be a massive amount of volatility. It's already been a very volatile month. The month of January has been extremely volatile, but that will be bumping it up even more. So we're in for an interesting time here, guys, for sure. And especially considering that Bitcoin is by all metrics overvalued on short term. But obviously that macro momentum hasn't failed Bitcoin yet. So it's interesting to see what that FOMC event will bring. Will it bring a correction, or will it bring a break further to the upside? I want to briefly interrupt this video to talk about the Bitget Exchange. The Bitget Exchange has 5 times lower fees than Binance on futures. It has a rewards center, it has a protection fund, it has events regularly run. For example, the FIFA World Cup event it ran recently was in partnership with Messi, the famous football player. There are many, many reasons to sign up using this exchange here, but if you sign up using my exclusive referral link, which you can find a link to in the pinned comment or description, you will get a further 15% decrease on futures fees, and you'll get access to an exclusive reward center in which you can gain access to 4,000 USD in rewards via completing various tasks of various difficulties. Signing up to this exchange using my referral link is by far the best way you can support the channel, and it's the best way you can support yourself as a trader, gaining access to the cheapest exchange on the cryptocurrency market. Now, for my viewers from the United States of America, when you're signing up to the exchange, click on Other as Country of Residence, as you can see I'm doing on the screen now, and you will be able to sign up and use the exchange normally as a non-KYC customer. You'll be treated exactly the same as everyone else in the exchange. So please sign up using my referral link. Thanks for watching the advertisement. Let's get back into the video. Now, what's interesting on the shorter term charts on Bitcoin is the fact that we do have an opportunity here to start to form something like a cup and handle formation, and potentially even see one more final swoop to the upside before that correction. That's what I'm seeing here. It's very hard to be precise. It's very hard to be accurate about what we're seeing in short term, because, again, every single short-term chart and even the longer-term charts are overvalued at this point in time, but we've just continued going upwards. So macro momentum is clearly more relevant than short-term price action. And for this reason, I would encourage people to just go with the trend, right? Just trade the trend, understand where your invalidation points are. The invalidation point for Bitcoin, and that is the point in which Bitcoin needs to break down to head into a downwards trend, is 21.9k. If we break 21.9k, this structure will collapse and we will see a retracement all the way back down to that 19.5 to 19.8k level. So long as we're above 22k, in my opinion, Bitcoin is in that macro upwards momentum and it's still seeing that upwards trend. Now, it's important to note, although the macro trend is upwards for Bitcoin and although we think the bottom is in, a correction will happen eventually. The DXY had a def cross and that was one of the reasons. In fact, we predicted this upwards trend to occur at 16k because of the DXY def cross. And that DXY def cross did occur. And now we're seeing the DXY trend downwards massively and it's going to be touching a support zone as seen by this ascending channel formation very shortly. Now, ascending channel formations are bearish structures, of course, and so eventually we can expect the DXY to break down and that will be good for the markets because DXY getting weaker leads to markets pumping. It's not necessarily leads to, but they go hand in hand. But the thing is, the DXY will be reaching support quite shortly. So yes, we might have a little bit more upwards move to go, but eventually when that DXY reaches support, we will be seeing some sort of correction or consolidation at the very least, and that could be happening sometime within early February or potentially even later this month. Total cryptocurrency market cap, yes, it's broken out of its this channel formation as well, just like many other charts, just like Ethereum, but it is running headfirst into resistance. However, it's running into resistance with a W formation on its side, and so it is relatively likely that at some point we come up and break upwards to the nearest support, near resistance zone above this one, which would be 1.14 trillion. So ultimately, guys, sorry for being short breath today. I'm feeling a little bit under the weather. But ultimately, guys, I just want to quickly just recap what I've said in this video. The short-term price action and the short-term TA, like it has been for a couple of weeks, is overbought. However, it's very clear at this point that macro momentum is driving Bitcoin further to the upside. And so it's just a question of whether we continue seeing that. And I think, honestly, we do have a little bit of steam left in the tank, especially considering the fact that Bitcoin has broken above 22.7k. Its nearest real support, the resistance zone, is actually 23.8k. So we'll see what happens. We do have a chance to form some sort of descending, some sort of cup and handle formation here. But ultimately as well, it is worth noting that it's just very indecisive, right? We can't really make short-term predictions when the short-term TA isn't working. It's just very hard to do. So I wouldn't be doing any overly bold trades until Bitcoin sees some sort of correction. I stand by that. The amount of times I've said that in the last week and I've been incorrect and we've moved further to the upside, that's just how it works. That's just how TA works. Sometimes the probabilities are skewed due to macro momentum, but that doesn't mean you throw TA out the window. You have to trust TA at all times. If you start distrusting TA, guess what? It might work for you for a while. You might get lucky, but eventually it's not going to work. So me personally, I'm trading the trend. Any current trades I'm in, I'm leaving them. And obviously I'm setting stop loss quite tight, but I'm not really entering any new trades right now. And I'm certainly not going to be entering any new trades with large portions of capital, especially with Bitcoin in this position of being dramatically overbought. And with FOMC coming up in 8 days as well, I don't know, it just seems a bit rough. But ultimately, yeah, it's good to see, S&P 500 certainly moving to the upside there and breaking above that resistance. It's good to see Bitcoin making some good gains on that descending wedge. In 5 days, we'll see whether that's an actual breakout or not. And at that point, macro momentum might be reconstituted and we might even see further moves to the upside. So I'm certainly not saying Bitcoin's done, on the macro scale. I certainly think Bitcoin has to go up a lot more on the macro scale. Again, I think the bottom is in. But it's just the short term, it's a little bit iffy, and as a trader, it's making me slightly uncomfortable. But honestly, it's not even a prediction at this point. I understand that TA is not really working in the short term. I can't make any short term predictions. I'm just observing, and I'm setting tight stop losses. That's all I'm doing here for Bitcoin. But yeah, very reassuring stuff here. Macro momentum has increased even more. And in 5 days, again, with that descending wedge break, it could be increasing, tenfold from what it is currently. That would be amazing to see, especially with the S&P 500 breaking out as well. So thanks for watching, guys. Before we end the video, I want to quickly take a look at the Crypto Academy. So the Become a Trader 10-unit course is made by myself and MegaWell Crypto. It's part of the Crypto Academy, which is our second business here. And essentially, it's a course that teaches people how to trade in a university-style format. So essentially, we've got a description on the website. You can read all about it. We've got the unit breakdown here. So every single unit, you can read about the units and how much content is in those units. And if you're interested in that course, interested in learning how to trade and becoming a trader on a professional level, you can go ahead and email us there at cryptoacademycourses@gmail.com and we'll get back to you with all that relevant information. Okay, guys, thank you for watching the video. Hope you enjoyed, and I'll catch you in the next one.